Welcome to Property Showcase, the podcast that brings you closer to the service providers that can inform your decisions about how you buy, manage and research top investment opportunities. Be informed and become a better investor with Property Showcase.
Our first guest today is Drew Evans. Now, Drew is the head of client strategy at Caifu Property. Hello, Drew, and thanks for joining us.
Thanks, Cindy. Thanks for having me, mate. Appreciate it.
You're very welcome. So clearly we're moving into a cycle where many sort of traditionally strong markets are beginning to soften. So I guess the million-dollar question is it now the time to sort of sit on your hands and be patient, or is it the time to make some movement? Are there any opportunities out there, Drew, that are still available?
Yeah, good question, Tim. And I guess I get asked that all the time. I mean, not to be a smart ass, but really there's only two types of investors, in my opinion. There's people that know how to make money in a flat market, and there's people that don't. You know, those are the two types of investors. Now, I'm a big fan of Robert Kiyosaki, and for those of you who follow him as well, he's a big advocate of learning how to make your money when you buy a property, not only when you sell a property as well. So to answer your question, yes, potentially there's a little bit of mass media doom and gloom, but for me, now some of the best times to be able to access equity if you go out and you actually look for it.
I quite like the way that you say that there's the time to buy and sell, the time to make money on it is when you buy and sell it. So what are the keys to creating equity in a falling market?
Yeah, that's a good point. So, mate, really equity comes to you in two ways. The first way is really quite easy, which is what a lot of people are used to, is where the equity gets given to you, through external market forces. For example, if you were lucky enough to buy in the Sydney market in the last 5 years, essentially because of the astronomical property boom we've had, that equity was gifted to you. The second way, which I think is going to be more important now, as we get into this phase of the cycle, is that you need to learn how to create your own equity. And this really is an art form within itself, especially at this type of the marketplace. So really, there's those people that know what they're doing, and there's people that don't really know what they're doing.
So Drew, let's drill into that a little bit deeper. So how that second way, how do you go about creating equity yourself in these, particularly in these falling markets?
Yeah, I think that's important to note in these falling markets. Well, really, I talk about being able to buy below market value, then by adding value, and then by either selling or refinancing to get your deposit back out of the property to continue to move it forward in your portfolio. So we talk about buying below market value, really talking about the 4 Ds. And we joke about it, but it's true. It comes down to, people that either pass away, so death, it comes through divorce, people that are desperate, and also the bank. So we know that with the APRA restrictions that are coming through with the Royal Commission, the lending environment is getting harder and harder. And for us, that's really how we're able to buy below market value. We then look at being able to add value on that same piece of real estate. Now, a lot of people can do that through, things like renovations. You can do it through building and development. And the last one is you can also do it through subdividing. So for us, that is the key in this market at the moment, is by able to buy well, and then also to add value so that you can continue to grow your portfolio and that you don't get stuck, which unfortunately a lot of retail investors do with that buy, hope and pray approach.
I think there's been a nice theme as we talked about this around buying and selling well, and that's where the equity comes into and then building value. Just one final question, in terms of adding value, do you personally like to build property?
Yeah, I do, Tim, and that's a way I've personally been able to make a lot of money, and obviously how I help a lot of our clients, get some great results as well. The main reason I really like to build is because we get to control the value that we create. You're not leaving yourself open to these external market forces. We really get to take advantage of 3 different tactics, not just relying on time like what the average retail investor does. So by building, we're able to generate instant equity and positive cash flow. We're able to take advantage of mechanical momentum strategies, and then also benefit from the long-term market maturity that the marketplace can deliver.
It's all about building equity, and it sounds also, just chatting with you here, Drew, it's also about sort of controlling the variables that you can control, and just looking for the opportunities where they present themselves, rather than just sitting around and waiting for it to be all lined up in one particular way. Yeah,
you're 100% right, mate. I mean, unfortunately, property investing isn't an exact science, but the more control that you can take control over, the better. So unfortunately, I think, with the market coming back a little bit, gone are the days where you can make an absolute fortune, by buying in Sydney, by buying in Melbourne. I think the markets are going to get a little bit lower and a little bit slower. But for people like me and clients of ours, that really breeds a whole amount of opportunity. And to be honest, mate, I'm really, really excited for the times that are coming ahead.
It sounds like there's an opportunity to be creative and to look for sort of new and innovative ways to do it. Hey, Drew, thanks very much for joining us. Now, if anybody wants to learn more about Caifu Property and anything else that we've chatted about today, how do they find you?
Yeah, sure thing, Tim. So we run a program called the Automatic Equity Program, which teaches everybody, some of the things that we look at and how we bring these types of deals together. So for any of your listeners, if they want to find out a bit more information, please go and visit www.automaticequity.com.au and you'll find all the information on that website.
Fantastic. Drew, thanks very much for your time.
Our second guest today is Michael Beresford from Open Corp. How you doing, Mike?
Good, thanks, James.
Well, thanks for taking the time to have a chat with us today. There's been quite a few political rumblings, shall we say, so a few shifts in the political landscape.
I hadn't noticed.
Yeah. There's been, yes, we've got a new Prime Minister. We've got Scott Morrison. He's head of Liberal Party. He's now PM. Debates are sort of raging around, will Shorten get in come end of the year? And will negative gearing go? And so there's a lot of fear around the property space. What are your thoughts on the sort of current climate around all that stuff at the moment?
The sun will come up tomorrow, take a long-term view and keep doing what you're doing. So, and I don't say that lightly. I guess it's easy with 20 years of experience being involved in property to be able to make a statement like that. Clearly, newspapers have a field day, believe what you will about how the media are responsible for some of this activity anyway. So we always kind of encourage investors to, and the general public, to be more informed than just what they can see on the surface. So understand why you're being told certain things. Obviously, the mainstream media can influence these kind of things. But the example that I use with our investors is just think back. If I said to you, you bought a property in the mid-'80s, would you be happy with the growth when you consider what that's worth today?
100%.
Right? Now, if we just take a really quick snapshot off the top of my head, in the mid-'80s, we had the abolishment of negative gearing. It came back pretty quick. We've had double-digit interest rates. We've had double-digit inflation. We had Keating's recession that we had to have. We had the Asian financial crisis when international share markets dropped about 60% in 1997, 1998.
That's right.
On the devaluation of the currency. And then we had the good old kicker global financial crisis in 2008. So pretty quickly, there's 5 really good reasons, if you want to find them, to be full of fear and do nothing. If you take a long-term view to your investments and know that really the impact of political parties has a very minor impact on the fundamentals of supply and demand and what drives markets, then that's a pretty good way to develop a thick skin and I guess be somewhat immune to the headlines and so forth that can derail so many people. The second thing I'd say about it is typically when you have these major events, like those ones that I just mentioned, without fail, quite quickly, we see, recoveries and performance being exceptionally big. Now, to illustrate the point, I guess, I was reading one of Tony Robbins' books recently, and don't quote me on the specific numbers, but it goes something like this. If the stock market has achieved 8.5% on average over the last 35 years in performance, if you were out of the market for the best 40 days, in that 30 to 35 year time frame, the results would drop to about 4%.
Wow.
Per annum on average. If you take out the next best 40 days, it drops to 2% per annum. Right. So just to put that into perspective, there are about 80 days out of the last 30 odd years that are responsible for the vast majority of the improved performance over cash.
Wow.
Right. Property equivalent, pick one, Asian financial crisis, 1997. Sydney property market grew 80% between 1998 and 2002. Melbourne, about the same between 99 and 03. There are opportunities where you want to find them and where you want to see them. Take a long-term view. You might not get the growth overnight, but we're not in this to make money in the first 2 weeks. So take that long-term approach and, trust that the fundamentals will be there. Cities and so forth don't get planned and the development and the policies don't get set with, just a 2 to 3 year term in mind. There's a lot of work that goes in the background and they remain pretty consistent regardless of who's in power.
Yeah, 100%. And I think it was actually Renee Rifkin, who a lot of listeners will remember, who said, whether you panic into a market or panic out of a market, it never ends well.
Yeah.
So I think that's some sage advice to take on as well. So in terms of Open Corp and your role there, does this affect sort of your values and how you'll be looking to, I guess, how you'll be providing, options for your clients and that sort of thing, in terms of being a business operator in this space and what you guys do? Is there any change here in terms of strategy?
None whatsoever.
None.
So the analogy I like to use is that we've got grandma's spaghetti bolognese. It's the well-developed recipe that works. And whether it's Monday or Friday or 2018 or 2022, we apply the same strategy. So along the lines of Rene Rivkin, one of our personal favorites is Warren Buffett. Be greedy when others are fearful.
Absolutely.
And fearful when others are greedy. So we actually see this as a fantastic opportunity because a lot of people will be sitting out of the market. That creates better opportunities to get the better investment grade stock and get better results, or position ourselves to be able to get the best possible results. So that's the way that we're looking at it. Stick to the capital cities where you've got the most amount of people and the least amount of supply. And it's a pretty good recipe over time.
Nice one. I think the overlay of the Royal Commission and everything that's happening there as well, that's driving a bit of fear into the market as well. People are, whether it's the banks or the lenders or whoever, people are just sort of sitting on their hands at the moment. Yeah, no doubt. And that's what most people will do, but the results for most people end up in being the pension. So, our attitude is you've got to have a go, take a long-term view, and everything works out. If using that 30-year example with house prices, if I showed you the news from one day to the next, it might have been good, it might have been bad. Generally, if you want to find reasons not to do it, there are plenty of them and you'll find them. If you want to find reasons to do it and take control, I don't know many people that haven't been successful over the long term. Yeah, good stuff. Well, we better wrap up. It's been fantastic to speak to you, Michael. And in terms of Open Corp, if people want to find out more information about you guys and what you do, where's the best place they can head to?
Jump on our website. It's www.opencorp.com.au. For all of the listeners out there, clearly if there is some fear in the market, love to extend the opportunity for anyone to write down the questions they've got, the things they'd like to learn more about, and jump on our website, again, opencorp.com.au/consult. Opportunity there to book a free appointment with one of my team.
Oh, nice one.
To be able to actually get all these questions asked and be making informed decisions rather than emotional decisions based on headlines. One other thing is a bit of a value add. Anyone that wants to connect with me on LinkedIn, it's Michael Beresford. Just add a message in there that you heard us on the Property Showcase podcast. We'll send you a free copy of our ultimate guide to property investment.
Fantastic. Good stuff. Well, once again, thanks very much for the time, Michael. And thank you all those who have been listening, and good luck with your investment future. I've been your host for today, James Mitchell. I'll catch you next time.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.